Right, so one last video for the day. So we're going on Wednesday the 21st of August. So you can see here we are within a consolidation on the higher time frame. This is a lot of movement and wicks, and you'd have had to be on the chart, quick entries, and once you see these confirmations. So you can see them all on there. This is FOMC minutes at the end. There's not much volume in that because there's not the conference after. The main volume will be with those minutes when there is a conference, not just the minutes being released. So you have here the London opening and the New York opening, which we're going to go over. So it goes in the previous day. You'd be looking for the continuation up to follow that trend. So New York, the price goes up. We have, now this is messy because you have a discount buy area for here, from this area here from the previous day, and you'd have a premium sell area from here. So London opening this here, and if we zoom in, you can see that that's within the discount buy premium sell area from here the previous day. You can see on the opening we've got a liquidity grab here, and that pushes down and then retest that once again. So that gives you a sell setup, and that will be on the 5 minute or 1 minute time frame. That gives you a sell confirmation, a little sell trade there, and then we start to go sideways. Then price starts to come up again. That was taking you out, but now you wait for the New York opening, which is here. Wait for the New York session to take place, and then you get your analysis going again. You have the previous day low here and the previous day high up here. Those are your main liquidity pools for today. So New York opening takes place on this candle. You can see we wick up. We don't really take the previous day high, but you take this candle here, the previous candle. So that could be seen as a sell confirmation once you take that liquidity pool, and you are still within this sell area up here. So you can see that as a sell. As price goes down, obviously move to break even. Or you could have took this buy from here. So this is yesterday's New York session opening. You could have seen that as a retest and then started to buy there. By the time these two price action moved down in your favour, you'd have moved to break even and probably been taken out at break even. Next candle, the first official move you got here is this big red candle here, that downwards move that takes the previous lows from here. So it's taking that previous low, and on that rejection you could have got into the buy to then focus on a continuation up, because that is coming down to a discounted buy area here, and it's taking liquidity, and we are in a buy zone. So once you get that reversal starting to happen, you can get into the buy and focus on a continuation up. Price goes up, clears the New York opening level and takes the previous day high here. This is another major liquidity pool, so that is a sell area which you'd be looking for. So once you start to get rejection from that, you could have started selling again. Obviously you wouldn't have took every move, but these are just areas you'd be looking for confirmations, and it's the same confirmations every day. Price goes down again from the previous day high all the way down to the previous day low, exactly the same. Once you see the rejection start, and then it retests that area once again to give you a continuation up until the close, and that retest gives you confirmation of a continuation into the next day for a bullish move. So on this day you would have lots of opportunities, but they would have been small, they would have been quick, and you probably wouldn't have taken all of them. You'd have mainly focused on the previous day high and lows grabs, and you might have got a bit stressed watching price action go up and down, and that's there to confuse you. That's why they do it. They do this to confuse you because you don't know what way it's going, and the more they do it, the more liquidity builds up and the more orders they could put into the market. That's exactly why they do it, so they can put orders into the market. Hopefully that makes sense. Yeah, that's a nice recap of that. As you can see, not much to go by when looking at price action. It looks very messy, but if you have these key levels on the chart ready, you can get a little trade off it nice and easy once you see a rejection from these major levels. And that's all we're doing. Message me if you've got any questions. Take care.